two buy calls over here. First one is a buy on LIC Housing. I think it's a very interesting chart in Karina, because on the medium term time scale spread over the last 2 months, I think from August end and September start, the stock is forming a inverted head and shoulder pattern, and surprisingly it's not a a reversal pattern, it's more of a continuation pattern. These patterns are a bit rare to find, but they generally lead into a strong trending breakout for stocks. So I believe LIC Housing could be one stock which can continue to move up higher from current levels. It's also crossed and confirmed a close yesterday above its 200-day moving average. So LIC Housing is the first buy. Targets to be kept at 340 and stop loss to be kept at 285. The second would be ban Adani Ports, again a stock which has had shown signs of, I would say, consistent attempt towards a break of 360 mark. Every time the stock managed to touch that 360 level, we saw big retracement and reversal happening into the stock. But it seems like with the markets being powered with the other large cap names, I think even Adani Ports can probably provide a breakout on the upside. So that's also a buy. Short term targets to be kept at approximately at 380 and stop loss at 350.
Okay, thanks for that, Kunal. So LIC Housing and Adani Ports, those are the two picks from Kunal this morning. Ashish, hi. What's on your radar as far as a high risk and a low risk idea is concerned?
Well, I think the market is very well poised now. The low-hanging fruit has been more or less been taken out. It has to be more stock-specific approach from here. But the market momentum and the sentiment is very positive. So yes, it's a great time to look at stock ideas. Now, when it comes to high risk, my idea is DLF. And the reason is that real estate as a sector seems to be doing much better than what was feared. When the COVID crisis started, it was a big fear because one was feeling that a lot of commercial and office spaces would go vacant. To some extent, yes, that has played out, but the situation seems to be much better than what was the fear. And that is one reason. Other is, of course, the sector has been a real underperformer for many, many years now. So yes, it's under-owned. Any kind of upside surprise here could really take the stocks higher. And coming to the stock itself, I think DLF is also doing fairly well. The current trigger is the deal which they have signed yesterday with the Standard Chartered Bank, 7.7 lakh square feet of office space in Chennai. The project, of course, is going to take time in coming up, probably 3 years from now. So yes, no immediate financial benefit, but gives a lot of confidence to the kind of development which is happening, and certainly removes a lot of fear which was gripping this sector. DLF on its own also has been doing very well, consolidating its space in the real estate market. They have moved out of all the unnecessary diversifications, whether it was hotels or cinema halls, etc. And the cash in the balance sheet has really been improving over the years. The debt service ratio has really become much better. That was a fear which was holding this stock down earlier. So I think on nearly all fronts, including the fact that in North India, especially Delhi NCR market, this remains one big player still standing. Many of the other of the erstwhile players have either fallen completely on the side or have become very weak in the execution because of the debt which they are carrying. So it's clearly going to capture more market share going forward. So I think this is a very under-owned stock, out of focus, but has a huge potential on the upside. So this is a high risk, high return stock which I have, and I have a target here of 250 rupees with 1 year's perspective. When it comes to low risk and stock, then my idea is PI Industries. The stock has been doing very well, and I think this would continue going forward. Here I have a target of 2500 with a 1 year's perspective. The risk here is not much because the company is doing very well, and I think the next 3-4 years again the revenue would double and the net profit would grow at about 35% CAGR. The company is specializing in offering complex chemical solutions, and they are very strong both in agrochemicals as well as in the pharma space. Recently, they have managed to raise 2,000 crore through a QIP, which they plan to focus on improving their value chain in the pharma space. They are getting into various pharma intermediaries which are currently imported. So the market in the domestic is going to be very good because currently there is no player which is doing these pharma intermediates. Both in the pharma as well as the agro space, the company is doing very well and going in for a huge amount of custom manufacturing, which is their strength. So really speaking, there should be no surprise here. It can be a continue, the stock can continue to do well and reach 2,500 in less than 1 year's time. So these are two stocks: DLF on the high risk, high return category, and PI Industries on the low risk but decent return category.